Saturday, April 18th, 2020, MONERO 64, home of alternative economics and contrarian views. So the Federal Reserve updated their balance sheet yesterday, Friday. They usually do it on a Thursday, but we had a holiday week the previous week, so they delayed it by a day. Of course, not surprisingly, the balance sheet increased by 284 billion just in 1 week. And I think it's good to put things into perspective just to show you how crazy the Federal Reserve is going, how mad, and how I think it's a huge red flag for people who hold Federal Reserve notes or dollars, if you want to call it that. I know a lot of my viewers think of the dollar as a way to silver, and they're right, but I'm going to make it a little simpler for those who don't know. Yeah, it's not real silver, of course. It's not real money. Many people say that the Fed doesn't print money, it borrows it into existence. That's baloney. The Fed doesn't need to borrow money. They just type it on their keyboard and they buy all the assets. That's what they do. Yeah, I was talking about perspective. So I've done a bit of calculation this morning and comparing how much the Fed has created in the last 50 days in terms of funny money or paper dollars, whatever you want to call it. They've created on an annualized basis, and we need to look at it in an annualized basis, I think, because it shows what the trend is. They've created $16 trillion. That's since, I'll tell you the date, 26th of February, 50 days. On a nominal basis, they created 2.2 trillion, which is already quite a bit. But it's almost the GDP of China and the United Kingdom put together. According to this worldpopulationreview.com and the IMF, GDP of China is around 13.4 trillion a year. GDP of the UK is 2.8 trillion. So yeah, they've created almost the GDP of China and the UK in 50 days on an annualized basis. Why is that a problem? Well, because it's not real wealth. China and the UK, the nations of those countries, they had to work hard one whole year to create that wealth. The Federal Reserve has done it on an annualized basis in 50 days. So I recommend you watch Gold Rush. It's a reality TV show. You might have seen it. It's been going on for many years. And you will see how hard it is to dig an ounce of gold from the ground. All the process, all the tears that go along with running a mining operation. And for the Fed to create the GDP of China and the United Kingdom on an annualized basis in 50 days, just goes to show you that whatever they create is not worth anything. Let's call it the Federal Reserve note or the paper dollar or the imposter dollar. And I wanted to go through some of the passages in this book here, A Pocketbook of Gold, a survival manual for monetary mayhem. This was written over 10 years ago by Jim Sinclair and Peter Carlin. And I think right now it's more important than ever to revisit this pocketbook. Here you go. I'm not sure if you can find it online. You might be able to go onto jsmindset.com and be able to buy it straight from Jim Sinclair. I'm going to go into chapter 2. It says, what is gold? So, and I'm going to look at two of the definitions, which I think apply very much to what's going on right now. First one is on page 60. It says gold is a barometer of fear and confidence, not inflation. And I think the confidence applies very much right now, because I think investors are starting to lose confidence in the Federal Reserve. I mean, for them to be doing what they're doing is truly amazing. Some of you might say, well, they're trying to hold the stock market up. But I don't think they're doing a very good job because the stock market is rebounded just over 50% from its bottom. And they've thrown the GDP of China and the UK onto the market. They've also created loads of programs to buy other assets. And this 16 trillion on an annualized basis is probably not the whole thing that they've done. They probably put a lot of stuff off balance sheet that we don't know. But okay, let's go through here. Gold is a barometer of fear and confidence, not inflation. And this is a comment here from Peter Monk they have in this chapter. It says, and I quote Peter Monk, "Gold is no more than a barometer. It indicates the general feeling of security people have about other asset classes. If you're safe, hold other assets. If you're concerned, let me tell you, most people in the world are concerned. Then you move to gold. The biggest driver of the gold price is a fundamental lack of confidence in government." You can, I think that's very appropriate for now. So let's go through what Mr. Sinclair and Carlin say. Gold is a barometer of confidence in political systems and, more importantly, in governments to provide both a proper environment for economic growth, that's not being done right now, and general existential security, that's not being done right now. This is one reason why gold rises at times of unresolved conflict and war, because confidence is waning and security concerns, both personal and economic, are heightened. This is historically provable. In fact, the gold price chart can be accurately mapped in geopolitical terms, both nationally and internationally. People's perception of geopolitics is an indication of confidence or the lack of it, and the demand for gold reflects this. This does not negate the idea that gold is a currency. Rather, it confirms it. Gold is the most common share of general confidence, whose price moves higher as political, economic, and security confidence declines. As Americans begin to fear competitive China and illegal and legal immigration of Mexicans and Central Americans, the perceived threat of an insurgent global Islam and a restored, reinvigorated Russia, fear takes hold. Gold rises as a result of the fear, and not, as is widely thought, simply because of implicit inflation. In fact, contrary to popular assumption, gold is not always a hedge against general price inflation. So there you go. It's a barometer of confidence in the powers that be. The other one that I think is even more important as it relates or pertains to the Fed's balance sheet is the point they make about gold being a revealer of falsely stated wealth. And what do they mean by that? Well, I think they mean exactly what's going on at the Federal Reserve, that they've created in 50 days on an annualized basis the GDP of China and the UK put together. That's impossible for these men and women at the Mariner Eccles building or 33 Liberty Street, which is the New York Fed's office, to do that. They're just like us. They can't create the GDP of billions of people in 50 days. And I'm sorry, if you don't understand that, then I guess you got to stick to holding on to the Federal Reserve notes or the pound notes or the euro notes. This is going to impact the whole world. It's not just the dollar. All the fiat currencies are going to vanish in value. They might be around, but they're not going to be buying much very soon. So let's look at what they say about that. Gold is a revealer of falsely stated wealth. When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry, who are forced to lower their living standards. Does that ring a bell? To compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities, affluence. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. This all sounds so familiar, especially now with all the money printing by the central banks, all the fiscal stimulus. They're trying to guarantee everything to the citizenry, right? But the promise of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which one bought certain things no longer does, but wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e. debt created by mismanagement. The US debt clock is now forecasting over 37 trillion by 2024 of national debt for the US. And I'm not only having a go at the US, this is happening everywhere. It's just that the US has better data. In the UK, it's going to be the same thing. The result is everyone pays more for food, fuel, and other necessities. Government passes on the mismanagement of economic affairs to its citizens by devaluation. As the imprisoned money manager Martin Armstrong has artfully stated, the decline, and I'm quoting Martin Armstrong when he was in prison, not right now. I don't really follow him right now. I think he's kind of changed his tune, but let's quote him anyway when he was in prison. The decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. Martin Armstrong. The corresponding rise in gold, especially when it is a global phenomenon, as it is now, we're seeing that now as well. All the currencies are making new lows versus gold, or gold is making new highs, right? We haven't got there in the US dollar yet, but earlier this week we got to within $150, so it's getting closer. In effect, a devaluation of all the world's currencies and a restatement of wealth on a global scale. So it can only be done versus gold. To devalue national currencies can only be versus gold, because you can't devalue the dollar versus the euro, because that makes the euro stronger, and then the Europeans will want to devalue the euro versus the dollar. It's a zero-sum game. It's like chasing your tail, so they need to do it versus gold. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. And here I want to stop and mention Harry Dent, because a lot of my viewers ask about Harry Dent, that he sees gold collapsing. But I don't think Harry Dent understands what gold is. The fact that FDR actually, in the height of the Great Depression, actually lowered the value of the paper dollar versus the ounce of gold. So that meant that gold went up, Mr. Dent. And that's why I wouldn't be too concerned about what Harry Dent says. I don't think he's done his research deeply enough and looked at what the dollar and gold were back in the last Great Depression. Falsely stated and assumed wealth largely created out of the assumption of debts that cannot be borne must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So there you go. And that's why I wanted to read a few passages of that book, because of what the Federal Reserve is doing right now, because of what the federal government is doing as well in the US, because of what the Bank of England is doing, because of what the ECB is doing, because of what all the central bankers around the world are doing, and governments as well. The debt tsunami is just overwhelming, and that's why you need to get out a paper. Does that mean you shouldn't have any money in the bank for your expenses? No, but if you have substantial savings or some savings, you need to make sure you protect it, in my opinion, with some precious metals, be it gold or silver in physical form. And this is why I think it's so important that people are aware of what's going on. There's the old saying, follow the money. Well, that's how you do it. You look at the Fed's balance sheet. They're totally destroying the Federal Reserve note, or the dollar, if you want to call it that. And they're going to destroy all the other currencies around them, because don't forget, all the other fiat currencies are a derivative of the dollar. You have to go back to the Bretton Woods Agreement. So, yes, and I know right now times are difficult. We've been in lockdown for over 3 weeks. We're supposed to be in lockdown for another 3 weeks. I think it's probably affecting people mentally. I will be honest, and I have to say that there's so much information out there. There's so much to think about that sometimes you lose perspective. But yeah, I think we need to focus on the money, not let all the information out there, all the misinformation, all the different opinions, like distract us from protecting what we have. And I have to say, I don't know what's going to come out on the other side of this, but hopefully, as in the Mandibles book, some of you might have read the Mandibles. Hopefully in the end, precious metals, gold and silver, will be able to protect you and your family, or me and my family as well. We'll have to see. Nothing in life is certain, of course. But one thing's for certain, the Fed's going like totally, how can I say, irresponsible, reckless. You can fill in the words if you want. It's just amazing. They've created the GDP of China and the UK on an annualized basis in 50 days. That's all you need to know. So if you enjoyed this video, please hit the like button, share it far and wide. It helps. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Steemit, BitChute, and DTube. I wish you all a great weekend. Take care. Bye.